Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the ES and the Bears put in a little bit of a day yesterday. We traded as low as 1938.5. The highs in Globex tonight just short of 48, 47.75. But what you're seeing is you're seeing some really violent spikes down to the 44 area. Here's a 15-minute chart. You can see back to 44, back to 44. It'll be interesting to see what happens if 44 breaks today. The Bears can't, they can't take any days off. Okay, you don't give up 70 handles in a row and then be able to take days off and allow the bulls to consolidate. Because what this will do is turn into a bull flag, and we will go reach right back up and touch that upper band again. No doubt about it. So what the Bears need to do today is break 38.5, break the 9-day simple moving average, which is sitting just under 1940, and go after 37. I'm not going to be in the quote unquote correction camp until this market can close below 1930. That's what I was saying all day yesterday, and nothing's happened tonight that's changed my mind. They need to not trade below 1930, close below 1930. And if that happens, then we can talk about the move back down to the middle band. And like I said yesterday, I'm not sure the market owes us much more than a correction to middle band. If the Bears can push it farther than that, we'll see. But for now, you have to temper your expectations, because we've done a really, extended band ride, and it indicates that there is a bid in this market. To say that it's going to simply collapse here, I don't think is a reasonable assumption to make with your trading. So when we get down to the middle band, and we will, because we always do. I mean, this thing will go back to the middle band. Where the middle band will be when it gets there is the issue. Well, it won't be 1915-23. That's what it is right now. It'll be closer to the 1920, 2023 area. The issue is when we get there and it holds, then whatever you're doing, you have to think about getting out of that and getting long, because if middle band wants to hold and we're not going down, then we're going to go up. Whether you want it to go up or not is completely irrelevant. Now, if we get to middle band and we break down, that's a different story. And you see closes below middle band, you see middle band go resistance. That is indicative of a deeper pullback. Do I think we're due for a deeper pullback? Sure. We've been due for a deep pullback for 2 years now. And I think it's going to come sooner rather than later. But for now, you have to expect what the market has typically been giving in these situations during this uptrend, which is moves down to the middle band. Perhaps we get a move back to retest the 50-day exponential moving average. It's been tested 5 times since mid-April. But beyond that, at a minimum, you've got to be taking a lot of profits down there if you're short. And you have to think about getting long if you're a dip buyer. But for today, the task is pretty simple. Bears need to break 38.5, get below 37, ideally close below 37. Bulls, they want to hold those lows from yesterday, turn this into a little bull flag, and pop it back up above 1954.75 and go get that 66 to 69 area. Okay, everybody have an amazing day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I will be back tomorrow morning with another webcast. Trade them well, everybody.